Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon. And today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions and any questions you might have about your subscription, key support level on S&P, what to expect next. We'll talk about debt ceiling. We'll talk about artificial intelligence, China reopening. There are a lot of cross currents, a lot of themes in the market, right? So very important to discuss that. If this is your first live event, welcome. Please type in yes. Always want to welcome new subscribers. This is my brief bio. I was Executive Vice President, Head of Technology at Options Express, several publicly traded company. My background is building technology, artificial intelligence, right? Building neural networks, models, and I've been doing that for over 20 years, mentoring and teaching subscribers how to trade stock and options. And finally, I want to say thank you to everybody. Because of you, I'm able to do what I enjoy. So that's very important to me. I'm going to go through several specific trade ideas and live trades, actually. So it's very important to understand the risk associated with trading stock and options. The disclosures are important. You can always pause the screen if you need more time to read the disclosures, right? I'm not a financial advisor, not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right. In terms of, before we get into a trading plan, let's talk about current market conditions. Right? Everybody wants to know about the breakout and see what the next steps are in the market. So let's look at the stock forecast toolbox. So short-term model sees that 420 is an overhead resistance and market is probably not going to break through this level. I mean, we're trading slightly above that, right? Usually I do have the rule, right? If you do see a break, all right, 420 is a year-to-date high. We are posting marginal highs. The question is it a sustainable breakout? Usually you do want to have at least 2 to 3 candlesticks, right? So we tested it yesterday. We briefly broke through the overhead resistance today, right? Let's look at the spiders. Right, you do want to have, I mean, we do have a breakout above 418, right? That's the year-to-date high. So you want at least 2 to 3 days to confirm the breakout, right? If you're doing day trading, you might want to, at least 2 to 3 candlesticks to see if this level will hold. But clearly, as long as we are above year-to-date high, which is roughly, that was posted in February, right? End of January, February, around 418, right? We spent a little time yesterday. Today, if Monday and Tuesday we're above 418, that opens the door to retest this uptrend, right? We've seen an uptrend, higher highs, higher lows since December of last year, or more since October of last year. We are trading in the uptrend. So the overhead resistance is around 426, 430, right? Which is now August high, right? So from technical perspective, I think that's the setup. So there could be continuation, right? We do have debt ceiling this weekend. A lot of the latest rally is fueled by idea that the debt ceiling will be avoided, right? They will raise the debt ceiling. We will, U.S. will not default on its debt, and that's fueling short-term rally. Some people think that this is one of those buy on the rumors, sell on the news, right? Jerome Powell is going to talk, I think, pretty shortly, right? 10 a.m. in the next 15 minutes, right? So Jerome Powell is going to start his panel with Bernanke. That could be a trigger, right? So, or could be the debt ceiling, right? So it's important to look at the next week, right? There are basically 2 things are going to happen, right? This is either a false breakout, right? This is a false breakout and we go lower, right? Or we have a continuation next week, right? I mean, I think it's a flip of a coin. It's very hard to tell. Usually, I do wait for 2 to 3 days. If Monday, Tuesday, we're trading above 420, then the breakout is confirmed. If Monday, Tuesday, we're breaking below 420, 418, then this is a false breakout, right? Which is going to happen, hard to say. Bulls are definitely in control, right? We have artificial intelligence, right? Fear of missing out. Nobody wants to miss the boat of artificial intelligence, right? This is, the internet of, 2000. This is, cable, invention of cable of, 80s. Refrigerator in 30s, and industrial revolution in 1870. So we've been through these cycles before, where nobody wants to miss the boat, and potentially it can continue going to these levels. More important question is 430, right? Is there enough momentum beyond August high, right? Because stocks like Nvidia, Microsoft, and Apple, a lot of them are trading above August high. Not a lot of stocks trading above 430, but there are a few, right? So the more important question is not whether we're going to trade about 420, which is obviously a positive surprise for me, at least. I didn't think we're going to get to 420, especially as we approach the end of May, beginning of June. Usually, people get nervous and liquidity dries out, and sell in May and go away, usually, kind of. And everybody thinks this way, so maybe that is one of the reasons we have these breakouts. But more important, again, the question is, are we trading in a bull market, right? You turn on TV, headline news, soft landing, right? We kind of put that narrative aside. We were talking about recession, shallow recession, deep recession, when the recession will start. Now we're back to no recession, soft landing, and are we trading higher, right? So that's scenario number one. We break through August high, on this fear of missing out on the artificial intelligence stocks, or we, second scenario, we go back to this trend, right? We've been trading, since March, right? We've been trading, right? So scenario number two, right? Are we trading higher, or are we going to go back to this range where we've been trading, since November, basically, right? Since November. Right, scenario number one and two. In a short period of time, right? In a short period of time, we're talking about June, June, July, right? Those are the two scenarios, right? Beyond July, summer usually volatile, potentially, we can see, scenario number three, right? It just depends on the time. So for now, like in the next few weeks, in the next few months, are we going higher? And this is a soft landing narrative, right? Where we're avoiding the recession, or are we, or eventually maybe we do break out, but it'll be short-lived, maybe a couple of weeks, maybe 2 weeks, and then we're going to scenario two. So that's more important question, right? For if you're a trader or if you're an investor, depending on your style, right? Some of us are value investors, right? And we long-term hold, like Warren Buffett type of investing. We just want to find stocks that have are relatively cheap, right? There are a lot of stocks that are relatively cheap to historical values. Stocks that are at 52-week highs, if the AI progress continues, right, adaptation, and they can start realizing revenue, that could give them higher valuation. So that's soft landing scenario number one. Hard landing scenario number two, right? We still have recession just because there is an AI and ChatGPT. Will it help us avoid the recession? So scenario number two. So we do this in the live trading room every day. I encourage you to always do this scenario, right? If you're a value investor and you want to buy, well, if you think scenario one, then yes, you should definitely buy. You don't want to miss the boat, right, of artificial intelligence. But if you think two and you're a value investor, well, you're probably going to get a better entry point. If you're more of a growth, or technical trader, same thing, right? If you think this is a sustainable breakout and continues to go higher, well, then you buy, right? But if you think this is unsustainable and there's a little room to the upside, then you will sell. So it doesn't matter what type of trading, unless you're doing day trading. Day trading, you might not care what's going to happen next week, right? You just care about today, Friday, right? Maybe Monday, but that's about it. So 1 or 2, is this a sustainable breakout and we're heading higher, right? And this is a time to accumulate and buy, or this is a false breakout and sell into the rallies, right? 2 different strategies, sell into the rallies or buy on the breakout. TJ, good morning. Is that changing the world? Very confusing to me. Bob, DJ 2, Michael 1. Bob, what do you think? I have a few people. Andre, Abdul, Glenn, Kevin, Martin, Mason, Michael, Patrick, Peter, Randall, Robert, Skip, Tim, a lot of traders, Vitus, MAG, Gnam, Logisolve, Pichaduri, Saltman. Sorry, I just see an email. I don't see a lot of Pierre, Bravos, Federer, AK. What do you guys think? 1 or 2? Are we heading high and this is a sustainable breakout, or are we reverting back to the range-bound trading? Well, we have a couple people 1, couple people 2. Anyone else? Question mark, right? You don't know. Okay, you don't know or don't have an opinion, right? So my opinion is 2, right? I mean, yes, we can get to this 427, 425, right? This uptrend that we kind of, touched a few times, kind of marginal highs, and then roll back to this. But I still think the next leg is down to the market. I would be a seller into the rallies. Why, right? What are my reasoning? The biggest reason right now is the dollar, right? Dollar is kind of quietly, right? You don't hear it on the news that much, right? And people talk about gold, pull back in gold miners and silver. But we have 2 weeks of higher highs, higher lows, probably on its way to retest 406, if I have to guess, right? So I think this is a sustainable breakout. I mean, basically, right, we were talking about building tops, building bottoms, right? This is clearly bottom building, right? Double bottom, kind of a classical setup, triple bottom, right? So classical setup, right? And the level held, right? 2 weeks in a row, we're making higher highs, higher lows. We'll see if there's a continuation, but we're either gonna continue going higher, right? Just like we did in here, right? Or, potentially we can pull back, but still going higher, right? We can have a couple of, those are the 2 scenarios. Right, and we know that strong dollar, 2021, end of 2021, 2022, it's a headwind for the equities. Maybe not tomorrow, maybe not next week, but at some point, if the dollar is going to be stronger, then when companies going to report earnings in next July, right? When next earnings season starts in July, this would be a headwind, right? And at some point, that is kind of against the soft landing narrative, right? Soft landing narrative, everybody said dollar is going lower, right? That's if you're in soft landing narrative. So that's kind of counter to the soft landing narrative, right? Because in the beginning of the year, before ChatGPT, everybody talked about ChatGPT. The soft landing narrative was based on a weaker dollar, right? Weaker dollar, number 1 argument for support. Number 2 is China reopening, right? China reopening in December when they announced that, we're gonna, remove that zero COVID policy, right? You have a strong rally, right? We went higher, but then we rolled back, right? So that's the second kind of lag in the stool, right? In lag in the chair, where soft landing narrative, right? Kind of is not working out as well as everybody anticipated, right? Usually, if we are trading in the bull market, commodity prices, right? If you look at the crude oil, if October of 22 was, the bottom in the bear market, and we are trading in the bull market, and we're going to have a follow through, oil should be at 100, right? Crude oil should be at 100 to 110. Shouldn't be at breaking down and making new lows, right? And same thing goes with copper, right? Copper, you know, if we are in a global economy and we are expanding and, you know, infrastructure bill and everybody's building, then copper prices should continue going higher, and they're doing the opposite, they're sitting on support. You know, if you look at the steel companies, right? Some of the steel companies, they are kind of have a vertical move down. So you can definitely see when it comes to macroeconomic data, manufacturing data, services PMI, leading indicators, they're all kind of signaling contraction and recession, right? So for that reason, I still think, you know, the next leg is to the downside, but I do recognize the strong feeling of fear of missing out, right? We had a very similar situation in internet bubble, right? And it lasted a long period of time, right? Before something happened, right? Kind of a trigger, and then everybody realized that some of these evaluations are inflated. I'm not saying we're gonna have the same type of scenario, but it could be that, you know, a little bit higher for longer. And, you know, rates, right? 10-year yield, you can see it's actually breaking out, right, from this range. We're talking about this range, so we're continue to trade higher. So that's, you know, bullish argument. But at the same time, that means that higher inflation, higher interest rates for longer, and at some point, with this high interest rate environment, you're not going to be able to have a sustainable breakout, right? That at some point people will go back to, you know, high inflations, you know, low unemployment, and will reward. But definitely short term, we are trading in kind of a regular recession type of market, right? Recession or no recession, right? Debate. When people sell TLT, they are buying technology, right? So, you know, last year it was sell technology, sell equity, sell bonds. Right now it's, you know, sell bonds, buy equity, or buy equity, sell bonds, or sell equity, buy bonds, right? So it's kind of the opposite, right? They're opposite in terms of movements in the yield. All right, so how do you, 2 nonsense, Randall, thank you. 420 is different. I mean, 420 is close to 430, so, you know, if we can reach 430, that's fine. But, you know, it's more of an idea, are we in a bull market or in a bear market? Because if we go to 430 and, you know, pull back to 420, then it's kind of not an event, right? If we break through 430, that would be major development, right? Like we've seen it in Microsoft, right? So you look at the stock like Microsoft, right? It broke through the August high, and it continues going higher to the 52-week high. So if spiders break August high, right, or QQQ, right, QQQ is sitting right at the August high and a little bit higher. So if this is a sustainable breakout, and QQQ, which consists of NVIDIA, Meta, you know, 50% of QQQ are these 5 or 6 names: Microsoft, Google, Apple, NVIDIA, Meta. So if they continue to go higher, right, next week there is a follow through, you know, then it could continue going to 364, right? So former futures Russia. Thank you, Kevin. I'll be sure to review it. Thank you. Thank you for. All right. So what do you? I mean, a lot of cross currents, a lot of uncertainty. What do you do, right? How do you deal with this uncertainty? So we do have different services at Tradespoon, right? If you want to follow my trades, Elite Circle, right? Elite Circle is one of the one of the services where I trade different strategies, right? Some of them are options, some of them are stocks, like silver, right? I'm long silver, right? I think we're still trading in the bear market. Silver is at 52-week high, right? Silver is at 52-week high. Was unable to break through 52-week high, right? Dollar is rising, so it did pull back to this downtrend, right to this breakout of the downtrend. And dollar continues to go higher. So unless, and you know, fear of missing out. So unless we have some kind of a event, dollar continues going higher, silver probably going to continue going lower. So I am hedging my silver position by buying a put, right? So that's one type of trades. Market has been trading sideways, right? A lot of people have been frustrated, basically saying, Vlad, spiders, you know, this was, we have, you know, finally have a, you know, attempt to break out, but we, you know, week 1, 2, 3, 4, 5, 6, 7. So for almost 2 months, we were trading in a very narrow range, you know, plus 2%, minus 2%, somewhere between 404 and now 420, which is, you know, 4% range, right? So very narrow range. So if you believe market is trading sideways and you don't really have a strong opinion that market is going to go higher or lower, it seems like one, you know, on the day where there's you know, announcement of artificial intelligence or debt ceiling, then the stock market going higher. Next week we have, I mean, we have Powell actually start speaking. And then we have, you know, manufacturing services PMI. If that comes worse than expected, right, or GDP revision are going to come in worse than expected, and the market is going to pull back, right? So depending on what are the headline news, market is going to react, right? But it doesn't look like it's breaking into one way or the other. Well, now it looks like it's breaking to the upside. So new market neutral strategies, there are a lot of them, right? You can do spreads, right? Option spreads. You can do cover calls, right? You can buy stock and sell call, or you can buy stock, you know, buy put, right? Merit put. Iron condors, right? Where you sell in premium, and basically with the idea that stock market or the stock will not trade in the range. So this week I did Alibaba, right? And I did Baidu, right? All iron condors collecting premium by selling out of the money puts and calls. Chipotle Group, right? The CMG finally also breaking out. Yeah, it looks like it's, you know, it continues to break out. So I trimmed because you know, my idea is selling to the rallies, but you know, it still continues to go higher, right? Another 1%. So these are some of the examples of stock and option strategies that we do in the live trading room, right? It's twice a week. I mean, sorry, it's every day, twice a day. We have closing bell, we have a morning bell. You can enter your phone and get SMS messages, right? So this is one way to help you trade. The other one is Stock Forecast Toolbox, right? It shows you support and resistance, basically saying, listen, support is 414, 420 is your overhead resistance, market neutral. There is no confirmation of a breakout yet. If you zoom out into 6 months, model also see there is not a lot of momentum beyond 420. Does it mean we stop at 420? It doesn't, but does it mean that the market is extremely overbought and vulnerable for pullback? Yes, right? Maybe you can get to 430, but eventually we will revert to 405, right? That's what the model basically says. So Stock Forecast Toolbox, right? We have seasonal charts that can help you kind of, if you trade in stock or you trade in, I mean, anything, futures, you can always use these ETFs or stocks to identify key support and resistance levels. So 420 is obviously very well publicized key level. Everybody talks on TV. The model basically identified it's a year-to-date high, very important psychological level. Bulls and bears are going to fight it off. You know, they're going to fight for that level. So that's Stock Forecast Toolbox. We also have models, right? Neural network models, again, artificial intelligence that run every day and basically tells you, based on your time horizon, right? Some of them are short term, like active traders, some of them are longer term, but tells you certain stocks that model does see an uptrend, like Leonard is an uptrend, Honeywell is an uptrend, FedEx, right? Looks like an opportunity. So, and it gives you support and resistance levels, right? Different strategies. If you see market, not down and pre-market futures are up, then maybe you use strategies A. If you see a pullback pre-market, then maybe you wait for predicted low. But we give you suggested entry prices and exit prices, right? And it's up to you to decide, based on your own trading plan and strategy. We propose that VIX is low, 15, market doesn't move more than 1% a day. So you look for, maybe 0.5% profit on this short-term trade, maybe 1% profit, but something reasonable, right? You always look at the VIX. If VIX is at 15, market moves 1%. When VIX is at 40, market moves 2%. So based on the volatility, this range will expand, right? But you always think about incremental gains, right? And compounding investment, right? You always look at the compounding investment. It's very important to have a trading plan, right? Everywhere we say, 4 positions. If you're new to trading, I propose 4 positions, 2.5% of account value, right? And you go through the calculations, and we do this in live trading, and to make sure you're never down more than 2.5% by looking at these support and resistance levels. So we go over that in live trading room every day, right? It's a great educational content to help you learn to become disciplined trader, right? A confident trader. Again, wait for 2 to 3 days, right? If you think we're gonna break 420, well, you don't really know, right? Fed is speaking, no, market could reverse, or it could continue going higher, right? Just depends what he's gonna say, right? I would look at even interest rates. Right now, it just started 5 minutes, but for now, 10 years, let's see, 2 years, probably even more sensitive. There is initial pullback. So again, if yield continue goes high, down, down, it's too early to tell, or TLT continues to rally, depending on what Powell will or will not say, that will have effect on the equity markets. All right. So that's active trader, right? In terms of some of the trade ideas. We have weekly trader, right? Longer time horizon, right? Basically, maybe you want to hold this position for a week or 2 instead of, a couple hours or a couple days. Some of the consumer staples have been uptrend, right? Energy name like NPC, model season uptrend. So we have weekly trader and monthly trader. So these are some of the trade idea generation. If you have a trading plan, you've been trading, you're confident, you're just looking for ideas, these are some of the trade ideas picks that we have. And in terms of if you want to know what I'm trading, again, Elite Circle, if you just want stocks, then it's Robo Investor. If you just want to follow my trades without any of the signals or tools, then you have Shadow Trader. If you want option spreads, then it's either spread or premium service. So we have different services for different types of traders, right? That can help you kind of navigate current market environment. And I propose, again, to have a balanced portfolio, right? Some of you said market is going higher, some of you said market going short, lower. Nobody really knows, right? There's a lot of uncertainty. For every bullish argument, there's a bearish argument. And in any given week, one argument wins over the other. But market is still trading sideways. So it's important to have a balanced portfolio in terms of long and short, right? If you said 1, we're breaking out, maybe you have 3 long positions, 1 short. If you said 2, market is reverting back to the range bound, maybe you have 2 long, 2 short, or maybe you have 1 long, 3 short, right? Just to express your opinion. But you never want to time the market, and you want to have a balanced portfolio of long and shorts for this type of market, right? We're definitely trading in traders market, right? Last year, nobody wanted technology. Everybody was selling technology. Everybody was in value stocks. This year, it's the opposite, right? Everybody decided to buy technology stocks because, artificial intelligence, and nobody wants value stocks. Everybody's staying away from value stocks. So these rotations will continue happening. It's hard to figure out when these rotations starts, when they end. So that's why I encourage to have a balanced portfolio. Maybe you have some value stocks, maybe you have some growth stocks, maybe you have some short positions to hedge your portfolio. All right, any questions? All right, there are no questions. Let me see, what else can I cover? We do have educational resources, right, in your dashboard. We have getting started guide, list of workshops, right? If you're looking for options trading, if you look for how to read charts, you can find library in these workshops. And recordings, Strategy Roundtable, we just talked about that. We do have video snippets, small short videos on different topics. We do have video blog and regular blog. So on daily basis, we do send out a blog where I talk about support and resistance. We do have trading guides, position size, risk management, and other. And we do have dedicated support. And then all of these are just different types of tools and services that you can consider. Any questions? TJ, FOMC meeting? I mean, at some point, right? At some point, we're gonna, and you can see kind of rates are start dropping. Let's see, stock market is reverting, right? We're back to the range. So at some point, there is a disconnect, right? I mean, this is great of this, sugar rush on artificial intelligence, but the bottom line, the way economy works, is that higher interest rates for longer are unsustainable, right? They're unsustainable. They will cause some kind of systemic issues, whether it's office REITs, office real estate, maybe it's commercial real estates, maybe more and more companies, smaller companies are start defaulting on their debt, maybe another regional bank will fall through. Artificial intelligence will not help avoiding these issues, at least in the near future, right? So every time Powell speaks, like, the reason rates are dropping right now, because, Jerome Powell is speaking, he probably reminded that, inflation is still stubbornly high, interest rates are going to stay for longer, and that theme is going to continue. That theme is going to continue as long as people are buying stocks, as long as everybody has a job, and as long as everybody's traveling, right? Because prices are not going down if people are employed and people are spending money and they feel good about their jobs, and they feel good about artificial intelligence. So FOMC meeting next week is probably going to be a reminder of that. The market is overbought and market is vulnerable, right? So market will rally every time Nvidia and Google have press conference and say that this is a new industrial revolution, right? Or invention of light or invention of computers, right? We're going to change the world. And everybody every time says, like, you have a fear of missing out, right? Because you remember what happened when cable was invented. You remember when Apple came up with an iPhone. You know that these are revolutionary products. You don't want to miss the boat, right? But market never trades one way, right? So every time Powell speaks, I think this is going to be type of a reaction. Yields are down, market reverses, right? And that balance of two forces will continue until something breaks, I think, until something breaks. And we've seen, it's not just a hypothetical black swan event and I'm just overly cautious. There are daily reminders of that, right? Of regional banks, of small companies defaulting on its debt, of, fire sales. You read Wall Street Journal, I read Wall Street Journal. Every week there is an article about fire sale in New York, New Jersey, San Francisco. Buildings was bought for $300 million, 5 years ago, and now they're selling it for $30 million, right? And there are no buyers, right? So obviously that's a problem, right? That's a distress. Somewhere it's gonna, some banks are probably have loans to these companies, and they're probably gonna go under. And at some point the skeletons will come out of the closet. When? I don't know, right? I mean, it happened in March. Now, kind of, it's on the back burner, but But I think every time Powell speaks, it's going to be a reminder, right? And this is the type of price action you're going to see in interest rates. I mean, QQQ, not a big drop yet, right? Spiders not, but maybe small caps. Let's see, it's more sensitive, small caps. So small caps, you have a bigger reaction, right? Because they're vulnerable. They don't have a strong balance sheet. So small caps will react, ARK Innovation, they will react more to these interest rate decisions. But I do think it's all about interest rates. If you want to know where a market is heading, you just look at the interest rates. Interest rates going higher, people think that we're going to avoid the recession and life is good, right? And yields should be higher. That's normal correlation. Every time the word recession is at the forefront, you're going to have kind of elevator up, elevator down. All right, any other questions? KRE pre-first. I mean, everything that's sensitive to, everything that is sensitive to the recession, right? Probably Microsoft probably not dropping that much, right? Because they have artificial intelligence, they have strong balance sheet, and there's no reason to sell Microsoft. But everything else, I don't know how's Deere doing after earnings. Everything else is sensitive, right? Deere, great earnings, up, everybody's happy, right? Up 10%, elevator up, boom, elevator down, right? So, that's going to be the pattern for everything except these few names like NVIDIA, right? NVIDIA is probably nobody's selling NVIDIA, right? Because this is kind of a bottom-up approach, right? People, value investors, bottom up, they basically say, I don't care about the, macroeconomic data. I don't care if people are employed. NVIDIA is gonna, change the world, right? So NVIDIA doesn't care about interest rates or macroeconomic conditions. But 490 stocks out of 500, they do care and they are down. But the 10 that don't care, they continue to be up until something breaks, right? Until something breaks. TJ, thank you. TJ, how does AI differ from ChatGPT? We don't have a supercomputers like Google and Microsoft that can do billion iterations. It's a similar approach. They do have neural networks. They have more sophisticated algorithms, but the API has been there for many years. ChatGPT, it kind of goes on the internet, right? And it does language recognition, right? It does decipher articles, right? And it's but it's the same concept, right? The concept of artificial intelligence, you have some kind of a data set, right? You have some kind of a data set, and then you learn it on patterns, right? And then you make a decision, right? In our world, it's you learning on price movements of stock market. In ChatGPT, somebody asks the questions, they go on the internet, they look at all these articles on this topic, and they learn on these topics, what do people say, and then they make proposal, right? Okay, this is the new. So it's a similar concept, but obviously, Tradespoon doesn't crunch billions of permutations per second, right? ChatGPT does, right? So it's a lot more, I would say same principle, but a lot more sophisticated. Dollar is selling off, okay? Yeah, dollar also have a pretty big pullback, okay? So again, there is some bullish, this is bullish, dollar is bullish, that it's selling off, right? Because that's good for the economy, weaker dollar. Interest rates are selling off, that's not so good, right, for the economy, right? Because that's a fear of recession. And I don't know exactly what is said, right? Because, it's been 20 minutes. I don't know, what is the headline news? Powell. Anybody's phone? Powell. Today. 4 hours. Let's see something. I mean, I would have to let me look at my Twitter handle. So we have a few minutes. All right, Twitter is usually great for this stuff, right? You go to Twitter. That's a stock that's, I think, worth invest in long term if you believe in Elon Musk. All right. Smash that we know that. Oh, debt limit negotiation pause today, talks leaving the room after appearing to hit a snag. Until people are willing to have reasonable conversations about how you can actually move forward and do the right thing, then we're not gonna sit here and talk to ourselves. Okay, so this is more of again, the rally was based on the idea that they will reach, debt agreement, but now they're walking away. So, and clock is ticking. So every time they walk away from the room, market is going to pull back. I'm surprised it's not pull back more. I mean, you can see rates pretty big drops. So, I mean, equity is just a matter of time to follow, right? Equity is just a matter of time to follow. Powell, as a result of bank tightening credit conditions, our policy rate may not need to rise as much as it would have otherwise to achieve our goals. Of course, the extent of that is highly uncertain. I mean, Powell is just saying the same thing and just reminding. Powell rates may not need to rise as high level, blah, blah, blah. Yellen said, to bank CEOs, more mergers may be necessary. Okay, so then fear of, defaults, right, and regional banks, that's probably fuel. Let me touch you. What was that? Not clear. Yeah, so I think it's not Powell's speech. I think this is debt ceiling, right? So people are very sensitive to debt ceiling. Obviously, if they can reach an agreement and U.S. defaults on its debt, well, that's a black swan event, right? So as probability of that event goes up or down, market reacts. So we'll just have to, and that can continue for the next couple of weeks, right? Because it's not like on June 1st, U.S. will default on its debt. It's going to be, some people say, first week, second week of June, then so that will continue. All right, TJ, thank you. Bitcoin friendly. Thank you, Kevin. Yes, there's definitely, but irrational exuberance, you don't know how long irrational exuberance can last, right? It can end today, or it can end 3 months from now, or it can never end, right? I mean, you look at the internet bubble. I mean, it took a while for these to kind of come. Silver, gold moving too. Well, in theory, silver should go up, right? Because silver is going up. So silver is extremely sensitive to dollar. Dollar is extremely sensitive to debt ceiling, right? Dollar is going to probably break down if the U.S. is going to default on its debt, right? So everybody kind of knows about that. So you're going to have these gyrations until they reach some kind of a solution. Do you think any of Ukraine peace initiatives will amount to anything? I don't think so, but there is supposed to start this counter-offensive, right? Ukrainian counter-offensive. That could be a trigger. Because, I mean, they've been accumulating the weapons, right? Not Ukrainian. But this stuff, right? So they are building this counter-offensive. Nobody knows when it's going to start, but they've accumulated a lot of weapons, and that could be a decisive moment in this war, and potentially can have good or bad effect on the market, right? and it is looming, and it can happen any moment, right? But again, it takes time, right? It's not something that happens in hours. It's something that happens in months, weeks, right? So you don't know. I assume, but it is an uncertainty. It is an uncertainty in the market. It's just, market today more, cares about, debt ceiling more than anything else, right? That is number one concern in the market right now. It's all about debt ceiling, right? All right. And, let's look at so we're back to, from technical perspective, right? This is a breakout, right? We broke out of this March-April range, which I thought was surprised that didn't happen. Now we're reverting back. So, they walked away. I don't know for how long, I assume during, Saturday and Sunday, they'll get back and figure something out. Next week, there'll be more clarity, but we either get back into this range or we trade higher, right? If rates continue to trade higher, then market is gonna go higher. If the rate's gonna revert and it's a false breakout, okay, then the market will revert back. Bob, yes, we will have a closing bell today. Yes, there will be a closing bell today. Again, I apologize. I was late today. I actually started on time, but I just couldn't get the go-to meeting to work. TJ, thanks. Okay, that's all I have for today. Thank you very much. Keep an eye on interest rates, right? We can debate about, artificial intelligence and what effect it has, but it's all about rates, right? And if rates are going to continue going higher, people are going to sell TLT and they're going to buy technology. If the rate's going to revert and sell off, TLT is going to go higher and people are going to start selling. Maybe not these top 10 technology stocks, but everything else, but at least everything else. All right, thank you very much and have a great day.